Hi traders, this is Houston Trong from thetradingedge.org, and this is your weekly market outlook video for April 22nd to the 26th, 2019. I hope you're enjoying your Easter long weekend. It was a fairly slow trading week this past week due to the shortened holiday week, trading week, and we can expect a bit of that slowness to continue on Monday as a lot of regions do take that day off. But earnings is in full season, so we do have names reporting throughout the week, which should add some volatility to these markets. We have some main names like Halliburton on Monday, and throughout the week you have names like Twitter, Snap, Facebook, Tesla, Microsoft, Amazon, Intel, Exxon, and InBev all reporting throughout the week, so definitely pay attention to those earning names. On the news front, you'll want to watch the jobless claims number on Thursday, and Friday we have the GDP number, which will be interesting to watch as well. So let's transition now into the charts. Let's look and see what the price action is telling us coming into the Monday trading session. So we'll begin with the VIX product as we usually do, and then we'll dissect the individual indices to see what's going on across the board. So first off, let's talk about VIX. We've been talking about VIX as a great short candidate since doing these video series. It's been over a month now since we've been doing these videos, and it's played out exactly as we kind of hypothesized. We were looking at that outside-inside pattern playing out on the quarterly chart. It, of course, resolved to the downside, and I was looking for this low here of 25.94 to get taken out, and we got that this week at the beginning of the week, and it closed below that throughout the week. So on the daily chart, what we saw happen here is that we had that gap down on Monday, crack below 25.94, great place to take profits, which is what I did. And then throughout the week, it just kind of chopped around, spending most of the week below the weekly open. The weekly open, as you'll see when we go through the other indices, acts as a really, really good level of resistance and as support, depending on which index or product we're talking about. We'll show more of this example as we go through the charts. But VIX, it was very, very tight trading. Lower on lower volume, of course, due to the shortened trading week. But on the notable things to watch out for, on the daily chart, we have that outside inside. Okay, so there's Wednesday's outside bar, inside bar on Thursday. We wanna watch and see how this outside inside pattern resolves itself on Monday. Do we break up or do we break down? On the 4-hour chart, just really quickly explain what we saw here. Outside inside, right on Monday, resolves to the downside and proceeds to go outside inside and outside again for the rest of the week. So very, very choppy trading, but the one common thread is that weekly open is holding. So on that weekly open here, it cannot break above it, right? Cannot break and hold above it. It's constantly closing below it. So here on Thursday, there was no Friday. On Thursday, we had that outside inside that actually opened lower. It looked like it was going to resolve to the downside, but it popped up here, I think luring in some bulls who thought the VIX was going to go higher. But when it could not break above this high here, then you know you have this situation. You're going to have outside inside, and that means it's a natural short. Okay, so if you look at that 1-hour chart very quickly, what you'll see is here on Thursday, this high, so it went outside and up, could not take out Wednesday's high. Wednesday was that outside day, right? Wednesday here has a high that was bigger than or higher than Tuesday session, and a low that was higher, lower than Wednesday's low. So you get that outside bar. But coming into Thursday, it could not take out that high. So once it fails, this bar fails here, they're going to short it and bring it back down to the range again. So here, outside bar and strength, it loses the momentum there, breaks back below the weekly open. So now you have full time from alignment to the downside, meaning you're trading below the orange line is the monthly open. That's also the quarterly open. You're trading below the quarterly open. You're trading below the monthly open. You're trading below the weekly open here now. You're going to trade below the daily open, right here. That's a daily open, and that's full time from alignment to the downside. So anything below here, it just shorts. They're just shorts, right? And so it just topples down. But it's very tight trading, so it's not very volatile. So that's, you have to watch for that, as how tight of a range it was this past week. So that's very, very obvious in for example, Spider. So once again, for the VIX, just watch out to see how this resolves on Monday. Now on Spider, it's still about 1.35% away from all-time highs. We have this inside quarter and up condition that's working for this Spider right now. Very good chance it takes out that high, right? The question is, how does it do it? What's that scenario look like? On the week, it's a very, very tight week. Look at the week. It's basically a doji on lower volume. So you can't really make the case right now that, you know, as a bear that it's, you know, that it looks bearish. It's just a doji pattern right now. It's not enough right now to say, you know, that's a short signal. On the daily chart, outside bar Wednesday and down on Thursday, but they close it back in the range right below the weekly open. So that's how tight of a week it was. That's how tight of a week it was. 1, 2, 3 sessions right there, 4 sessions right there, all around that weekly open. Okay, and then we have that outside and down pattern. You want to see how it resolves on Monday. If it breaks to the upside, right, we could see that come back up here and challenge those all-time highs. The outside bar itself, as I've mentioned on numerous videos, is not enough as a bullish or bearish pattern, right? People get worried about engulfing bars and how bearish or bullish they are. It really isn't enough. That one bar is not enough context. You want to see that bullish or that candle, that engulfing bar or that outside bar in the bigger context of the trend and, you know, what's the next bar. Like for instance here, you had a bullish candle there, well, bullish engulfing if you want to call it that because it's, you know, green. They broke to the downside, but as soon as it breaks above that pivot high, this downside break here, then you know they're going after that pivot there. So same thing could happen here on Monday, right? You had that break to the downside. As soon as they take above this high here, they're going to go after that pivot. So what are they going to do? That's what you have to watch out for. Now on the lower time frame chart, this is how tight of a week it was, right? So let's zoom in here so you can see what type of trading you can expect when you're trading in a very tight range. So I drew it in already, but essentially we had a series of highs, higher highs, and lower lows. And that's very frustrating to traders because most traders, they've been taught to look for higher lows in uptrends and lower highs in downtrends. And what you're seeing here are higher highs and lower lows. And because you're getting that broad information, which is stopping out both sides from getting traction with their trades. So that's very frustrating to most traders. And that ends up giving you that doji pattern, right? That inside week we talked about, inside week, but that very, very tight week that basically opened pretty close to where it closed, pretty much where it opened. So that's what you're seeing with this scenario here. So very, very tight trading. And when you see that, then you can, you know, when you're seeing this type of behavior, you can pretty much guess that that week's going to be either an inside week or a very, very tight week like a doji. So on the spider, not a lot to do here except for watch and see how this pattern resolves. So for instance, if you look at the 2-day chart, outside bar. Okay, so on Monday, how do they resolve this outside bar? It's not enough, as I just mentioned, to look at one engulfing bar and say it's bullish or bearish. Is it break to the downside or break to the upside? If you look here, as an example, that bullish engulfing candle or that outside bar, simply speaking, it broke to the downside, but in this scenario here, they went inside bar right afterwards, and as soon as they broke above this inside bar's pivot high, immediately that pivot's in play and that pivot's in play. So it quickly turned into a bullish scenario. This same scenario again, right? It looks bearish. Look, engulfing candle or outside bar resolves to the downside, but as soon as this bar gets put in and it comes back into this bar's range right there, there's the potential for this thing to come back to the range again because that's the fractal nature of price action. They know which pivots, everyone knows what pivots to go after, especially in a bigger uptrend. So the only scenario here we have to watch out for is which way does this outside bar resolve, to the upside or to the downside, recognizing that we're now trading above this broad information. And so you basically want to see this thing stay above the broad information. Otherwise, if it comes back in, it can go back lower. But right now, the all-time high is very, very close. So let's see how they decide to get those all-time highs, because I think it's just, again, a matter of not if, but just when. Now let's go back to our next chart. So let's talk about the Qs now. First off, congratulations to all those who are along the Qs. I've been talking about the Qs going all-time highs for the past several weeks. You know, XLK did it, I think 2 weeks ago now, or last week, or 2 weeks ago now. And we're just waiting for the Qs to hit those all-time highs. And so congratulations to all the Q holders who were able to hold on and catch that ride. It all started, again, from, you know, the breakdown in Q4. We saw that outside-inside scenario play up to the inside, to the upside, and it's just been a steady grind to the upside. So at this point here, Q's still quite strong. Again, you simply want to watch now for continuation. Now the bears, if they want to break this thing down, they have to take out last week's lows. Okay, so they got to break below those lows there, but they still have the monthly and quarterly open to negotiate. So at this point here, there isn't any big price action alarms that are causing us to be worried about that bigger term trend reversing. Now it is a momentum trade at this point, because if you look at the Qs here on the 2-day chart, it is outside bar and up, as we talked about before, right? When you see these outside bar and up scenarios, they need to keep going, otherwise they risk pulling back. But just because it's a pullback doesn't mean it's a correction. So it could just simply be a pullback to find, you know, to stop out those weak longs and to find some new longs to get long and to push things even higher. So at this point here for the Qs, just watch out, like we said on the VIX, which way this outside-inside pattern resolves. Outside-inside to the upside. 187.53 was the all-time highs. It broke through there back on the 17th, but it closed below it. So let's see now if they can break above it and stay above it. Because XLK, as a quick refresher, right? So there's the all-time highs, 76.27, and now it's trading at 77.82. So XLK is obviously overweight more in some of the big tech names. But this thing has, you know, since that broken above there, it had a really good week last week. It was up another percentage, 1.31 percentage points. So still going strong on the XLK. Okay, so let's keep moving here. Although I do want to show one chart. I want to head back just one chart here for a second and talk about the spider. So I talked about spider already, and I do want to point this out, is that the spider is in making higher highs, but it's been kind of choppy, and we're getting fewer and fewer spider components actually participating. So this chart here, the blue line, as I show every now and then, is the number of S&P 100 stocks currently trading above their 50 period moving average on the daily chart. And so as you're making these highs in this trend here, we're getting fewer and fewer S&P 100 names above their 50-day. So right now we're only trading like around 73% of them above their 50 period. So it's a bit of a red flag, but not enough yet to call for a short. If you recall, for the SPY chart, you know, you really want to see these weekly lows get taken out, and you really need to see this month and this quarter turn red before you get really bearish. Because right now, just a pullback here would be still a very small pullback in the bigger picture. The more pressing matter is, how do we get these all-time highs once again at 293.94, which is again not far away at all. But continue to watch for that, as you don't want to be seeing this kind of negative divergence play out for a long period of time. Otherwise, it weakens the case for a prolonged run to the upside. Okay, now back to our indices. We just finished talking about Qs. So on the Russell, Russell's actually the weakest out of all the indices right now. So we saw this past week was a real sector rotation. Not just sector rotation, but rotation in stocks from small cap into large cap stocks. So the Russell now, it lost a bit of ground this past week. It was down, 1.29%, and we're still over 10% away from those all-time highs. So the Russell, we are seeing a lot of money flow out of those small cap names into larger cap names. So a lot of the big tech stocks that are in the XLK, that are weighted heavily in XLK, saw really good returns, like Microsoft and like Apple and some of these other big tech names. But these small cap names have been getting hurt. You saw this past week. So let's talk about the bigger picture. On the quarterly chart, it's still inside quarter. We're still trading inside of Q1's chart, which is also an inside bar. On the monthly chart, Russell, inside month still, inside of last month's inside month. How do we resolve that? And this past week on the weekly chart, we had that red week Okay, so if you look at the daily, as we pointed out here in the beginning, how does price react to the weekly open? That's what you want to be asking yourself throughout the week. And for the Russell, unlike some of the other charts you'll see in a few moments here, the weekly open was actually resistance. It opened right there, right at the weekly open, right? That's the open right there, of course. And it could not stay above it, right? Anytime it got above it, they quickly sold it. So the Russell certainly finding some resistance at that weekly open. So in the Russell, we have that outside and down scenario. We want to watch and see now, does it test this monthly, quarterly open and turn that month red? Okay, so pay attention to that. On the 2-day chart, you have that outside bar. Okay, so you want to see right on the top of that broad information. So now what's going to happen? Outside bar down, or are they able to find some buyers and seem to come back up through the range again? On the 4-hour chart, we have that outside inside sequence. Okay, so now we want to be seeing how does it resolve on Monday, to the downside or to the upside. So it's a real, I guess, opposite to what you could see with the Dow. The Dow is doing a lot of catch up. So this past week, the Dow had a really, really good week. It was up 0.5%, not a lot, but it was very, very strong comparative to the other indices. So the Dow now is only 1.3% away from those all-time highs, so it's catching up to the spider. And the Dow has a lot of things going for it. A lot of the longer time frame charts are very supportive. As I pointed out last week, what do we have here? Inside quarter and up, inside month and up. Last week, inside week and up. So all the bigger time frame charts were pointing up this past week. And so what we see on the daily charts? A grind higher. It opened right there on Monday, but it spent the rest of the week above that weekly open. And you can see these past 1, 2, 3, 4 bars, that weekly open acted as support versus the resistance that we're seeing with the Russell. So the Dow and the components of the Dow, and many of the components in the Dow were doing very, very well, like names like Apple. And so on the Dow chart, you see here on the 4-hour chart, outside, inside, that was Monday, right? Resolved to the upside, bam. Outside, inside, resolved to the upside. Okay, so that's you know what I'm talking about when I'm saying watch to see how these things resolve, because that will be your bias. Okay, so talking about some Dow names, as I mentioned in the last week's video, I said do a bit of homework and find out which of those Dow names look strong, because there's a chance that the Dow is going to want to play catch up, and there's going to be some easy trades there. And a couple really apparent names that popped out early in the week was Apple. Okay, so Apple popped up very, very quickly. So Apple here, inside day on Monday, sets up very, very nicely. Apple, by the way, if you haven't looked, it's outside and down on the quarter, but now up, right? So now you know that they're going after that pivot. So I'm sure Warren Buffett doesn't feel good about selling out at his Apple shares, or maybe he doesn't care. But right now it looks very, very bullish for Apple. Very, very good macro charts. Now, Apple, green week, green days, and of course, Apple had a great scenario here on the 4-hour chart. So this inside bar here, that's your Monday. That's right there, right? Going into Monday, that's your Monday right there, and that breaks to the upside. Okay. The other name I pointed out last week was Coca-Cola, moving up very steadily. Not a lot of fireworks there, which you can't expect really from Coca-Cola, but it's been slowly making its way up, up, and up. It's still inside quarter, but the good thing going for Coca-Cola is that it's inside month and up. So outside bar, inside bar, now going month and up, going after that pivot there. Last week was an inside week and up, right? So inside week and up, and basically, any kind of pullback on KO was a buying opportunity. It was hard to buy into it. You kind of had to get into it intraday or get in ahead of time. But you can see here on the daily chart, grinding higher. Now it's on the Bollinger Band high, so you want to see how it does as the Bollinger Band walk. But there's your outside inside sequence here on KO that results to the upside on Wednesday, Thursday. Okay, so continue to watch those Dow names. These guys are pushing the Dow to potential all-time highs. I'm leaning towards all-time highs. It's, again, well, not a question of if, just a question of when and how. So let's move on now to UK oil. Not a lot to say about UK oil other than it looks like it's going higher. It's just squeezing higher now, and any bears who got short in this sequence down here is now feeling the squeeze, as they've had a really phenomenal run for the past quarter, past 2 quarters on oil, up 6.4%. This quarter, last quarter, up 26%. So having a fantastic run here these past 2 quarters. So outside, inside, now it's quarterly and up, right? So now this is the pivot you're going after, 86.72. And once again, it sounds like a lot, but it's really not that much, considering where it's come from, right? So again, the highs here are like 146. So yeah, oil could go higher if the macro new supports it. The price action right now is supportive. Okay, so right now just continue to watch for oil. It's just grinding higher, and there's no need right now to get too bearish on oil, just because it seems elevated. That's not a good enough reason. The price action right now is not dictating for anyone to get bearish on oil, unless you're very, very short term and you're trying to play, very, very short term patterns. But the macro picture is up. Bonds, same thing with bonds. We've been talking about bonds, and bonds just been kind of grinding lower. So it's the opposite of oil, but bonds is inside this situation here. It is on the quarter and inside quarter. Okay, so still got a lot of quarter to go through, so nothing major there yet to be watching at. But the month here, it's inside month. March had a very, very big range. So you always have to be asking yourself, how do you get outside of March's range? Because it's such a big range. Right now, it's staying inside month. It's already, the 3rd week of March. So now you can expect that inside condition to begin to create some chop. And that's what we saw this past week, right? So there's bonds on the daily, and it's chopping around, right? It opens up higher on Monday, inside bar, gaps lower, and they buy it back again, and they manage to close above the weekly open. But it creates a very, very, it looks like a bullish hammer, but it's a very, very small range bar. It's only 0.19% up on the week. But the bigger pattern here, if you look at the weekly chart, we broke above that brown information. But as I said, if you come back into the range, there's a chance that we go back through it and take out this outside bar's low, 120.89. So stay on that one. Bonds, just watch and see which way it goes, because on the 2-day chart, it's an outside bar. So watch and see how that outside bar resolves itself. Okay, gold, I'll just bring it up very quickly just to say that, we'll do an update. There's nothing to do there, right? Unless you're paying, once again, very, very short term and using leverage, there isn't a lot going on in gold, because it's such a choppy chart. Because the 12-month chart, as I've said in every single video so far, we're inside year 1, 2, 3 years now inside of 2016's range. There's no reason to get too excited about some of the trades in here until you break out of that range. Okay, so when you're inside this tight box here, this is the trading you can expect. So even though we had a gap down on Monday, right? So that's your Monday, gaps up, you have this gap down. It's just choppy. It's very, very tight in the sequence here, right? It's very hard to make money there. So there's easier trades out there than gold. Let's talk about digital gold, Bitcoin. So what's Bitcoin doing? Well, it's just consolidating its gains. So on the bigger picture, I want to show something. So here's your 3-month chart. I've shown that a number of times already. Okay, so went inside bar and down. Now inside bar and back up again, going after that pivot there. 7,788. That's the pivot that it's going after on the quarterly chart. Now it's always it's always useful to really zoom out. And let's zoom out and look at the 12-month chart, the yearly chart, and this is quite interesting. Okay, so look at Bitcoin on the 12-month chart. We know what happened last year. It had a huge sell-off, down 72%. We know what happened back in 2017, a massive run-up, right? Up 1,300%. Followed by the big correction. Look what happened here. Okay, back in 2013, exact same scenario, very close to it. Okay, we had a situation where it opened up at 93 and it got to as high as 1175. So that's 1,000+% return, percentage point return in 2013. The next year we had that huge correction, down 56%. Okay, and then it went inside bar and it was up that year 33%. So what do we have here? Same sequence right now, right? Big green bar, inside bar, inside bar. Here, big green bar, inside bar, inside bar. So right now it's kind of playing out the same way it did in 2013, 14, and 15. So it wouldn't be surprising for me for this year, 2019, that we get an inside bar, right? So what's the chance that Bitcoin breaks above last year's high here? 17,252. Still early in the year. Anything's possible. It's only April. But what's the chance that it goes here from 5,350 around about and goes above 17,000 to break this inside bar? Not very high. Okay, so if I'm a betting man, and I'm betting that's not going to break above that this year. Okay, I'm thinking it's going to go, it may just sit around here for the rest of the year. And that's still been a great year. Look, you're up close to 40% on Bitcoin since the beginning of January. So it's a pretty good number, right? It's not much different than what we saw here back in 2015, where it was up 33%. Okay, so now if you just sit in here and have a big inside bar, then for 2020, that sets up a potential situation where if things go well, then it breaks back up again, and you get this scenario in 2016 where it was up 120%. And who knows, once again, it can do another 1,000+% move in 2021. That's a speculation. So we'll just play it bar by bar here. But this is what makes it interesting when you pull back a bit and look at the bigger picture. All right, so let's squeeze down here back to the monthly chart, which is long term, by the way. Inside it up on the month, and this past week just inside week, right? So just consolidating those gains. The bears keep trying to hit it, but again, they're just steadily keeping the gains, and you're not that far now from the highs put in at the beginning of the month. So just keep your longer term trades on there and trade around those bullish biased positions. Okay, now for one other chart, let's look at the total, which is the total crypto market cap index. Useful to look at. Looks very, very similar to Bitcoin. Outside, inside, and up on the monthly chart, and all the cryptos are kind of looking the same right now. Okay, so they're going after that pivot there, and it's inside on the week, and they're slowly just climbing up higher. I wouldn't be surprised once again for this thing just to go sideways for a long period of time, because you're already up. Look, 25% for the month, so that's not bad for the month of April. Okay, just a few more names. Let's look at one other name is this. We already talked about Apple. I just want to highlight two final names, and that is Exxon, because they have earnings this week on Friday. Just give a quick update on that. So Exxon, being dragged up by the bigger oil condition here, and so at this point here, being a Dow stock, I'm keeping an eye on it just to see how it trades. But it's going outside bar and down on the week, so you want to see which way that resolves. How does that play out? The bias is to the upside. Okay, so Exxon on the quarterly chart, it was inside quarter and up, but it came back into the range again. So you want to see, do the bears push it lower, because it's sitting right at that quarterly open. Okay, so it's right now trading below the monthly open and the quarterly open. So here at this point now, you want to see, do the bears keep pushing it lower, and they go outside and down and go further down. The daily is that outside bar, so that's what we're looking for. How does it lead into earnings? It's going to be very tight still, because look how tight the Bollinger Bands are on the daily and the 2-day. So I'm not expecting a lot of fireworks here before earnings, but definitely want to be watching to see what happens, because this is a bellwether stock. The last one I want to just preface here is or share is Intel. Intel, as we pointed out already, went to those all-time highs. Is it all-time highs? Let's zoom back. Not quite all-time highs. Sorry, this is going back. Let's see here. The last time was this high was back in 2000. So this is as high as it's been close to 20 years, so 19 years. And it's really off the back of some of these big bars that came back from 2018's lows here. But it's been on a phenomenal run here. The only issue with Intel, what I want to point out, is that here you're right at the top of this Bollinger Band. And so you want to be seeing how price begins to react here now. And can it do the Bollinger Band walk? Because you had this big gap up here. We have earnings on Intel on Thursday. So does it maintain this gap, or does it do a gap and reverse and fill the gap here? Because we saw here on Thursday, inside sequence, So how do we resolve this inside bar? Okay, do we break to the upside and it squeezes higher, or is it break to the downside to consolidate and just keep going, you know, and go keep on going? Because right now there's no, you know, there's no testing this low yet. This week's low is 3.67 percentage points away. That's pretty far away. But the question is, how does Intel keep moving higher from these levels? And maybe is Intel one of these names that ultimately helps the Dow hit all-time highs, or acts as the hindrance? Something to watch out for with all these Dow names. So I hope you enjoyed this week's weekly outlook video. If you have any questions, you know where to find me. And I hope you have a great trading week. Happy trading.